The following station of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 26th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows, absolutely, that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that everything in life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I am absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, if you would, please put radio show question, and in the Tiger's Den, well, hey, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 77 points, 26,000. 569 is the print. S&P's up 9. NASDAQ 100 43. Russell is slightly in the red off of $1.50. Semis are down about $1.50. Not 150, 1.5 points, so basically flat. Treasuries are up 0.9%. That's almost 100 points to the upside. New York Stock Exchange up 24 points. Wilshire up 70, about 0.25%. To the downside is gold, off $4, 12.01. Silver's off a nickel, trading at 14.43. Light sweet crude is off 33 pennies, trading out at 71.95. We're going to start with light sweet crude. You don't need to know who's leading and who's not leading to the upside and downside, do you? If you want to know, it's Booking Holdings, Mercado Libre, Tesla, and Biogen. That's BIIB up 3%. Those are the dollar leaders to the upside. To the downside, it's Coherent off 11, Cintas down 7, Arista Networks off 7, Innogen off 6. We can always take a look at those if there are no questions. But we did get a question here from Robert B. Robert says, hi, Steve. Hey, Robert. I have a couple questions about West Texas Intermediate, WTI. I've charted CL, and I am seeing a time to mark 13 count to the downside that posted yesterday or the day before. Are you seeing this too? What's the time frame to the downside? No, I'm definitely not seeing a time to mark 13 count to the downside. Now, how am I going to prove that? Let me get a daily. Maybe I'm wrong. Maybe I'm just dead wrong out there. Let's just simply put up the light sweet crude contract out here. So, and oh man, what the heck happened there? Let me see here if we can actually do this. Make sure my fingers can do the proper walking. So we're looking at the November 2018 contract, and this thing has been moving to the upside. So Robert B, I'm not sure. And maybe you meant upside. And you know what? I don't have on this chart. How can I get a chart that's got? Oh, I know how I can do it. If you just give me a moment here, all I have to do is just go change some of these signal settings here. So sorry about that, folks. But hey, you're just going to watch me live and in action. Just a couple of things that I need to change so I can take a look at the sequential and the combo counts out here. So there we go. So they're in here. So even if you were talking to the upside out here, Robert, I don't see that. I show the TD sequential count as yesterday being 7 and the combo count being 9. And so I don't see that. But here's what I can share with you, and then I'll read your next question, as long as we pulled up the November contract here for light sweet crude. The green dash line, I'll get it out. The green dash line on my system is the Tom DeMarco setup trend line. Now, there we had a 9 count to the downside. So that's the first thing that we had. And you take the highest high inside that grouping. That happens to be, let me get my cursor out here, the day of July 5th. The high out there is 73.15. Now, we haven't pierced that. That's resistance. And if price can take out resistance, there's nothing more bullish than a failed bearish pattern. Although I won't call this overly bearish. I just simply will use this, or I would use this as more of a momentum move indicator. But it does look like to me that's where price wants to head up to. Even though it's trading back a little bit today, so what? Big deal. It's got a rising price oscillator. We know that because the line is green. We have price trading above the top of the box. So both of those things are bullish out there. So with regard to that, I don't see a bottom. And the top I see resistance. That's about all I can say there. Then you say, do you think WTI oil merely pulls back to the OUL line, then resumes to climb higher, or are we at the top? Well, we know where there's resistance. Trying to forecast whether it's going to be able to bust through that or not, I don't know. If I take a look at the profiles themselves, if we take a look at these, so here is our 60, our 5-hour, our daily, and our weekly. We're above the weekly profile. As long as price closes this week, Robert, above 71.10, then that would suggest to me, okay, this has got an A to B equals CD to the upside, should get us to 73.93, right around there. But we can see, Robert, that is a possibility that tomorrow, if you hit me up tomorrow, maybe there's going to be a brand new daily profile that'll set up new support and resistance out there, and maybe we'll be able to find out if the box is bullish or bearish or just simply neutral in structure. Now, I suggest that because the bar is currently orange, but that bar, it could close early, and what I mean by that is that bar might actually not be orange by the end of the day. So I hope that helps you out, but with regard to, does it look like price might pull back to the oscillator and change line? It might. It might. And if it did, then yeah, that would be your buy right around 70, 79. Hey, let's go out to San Diego and speak with Tony. Tony the Tiger. Tony, thanks for calling. How are you doing today?
I'm doing well, Steve. Thank you for taking my call. I appreciate it.
My pleasure. So what's the ticker symbol for Cisco? CSCO?
CSCO, and I got into it about mid-August on the break of 46.40, I think, which was like a 10-year high. And I bought both positions, and I bought some January of 2019 49 strike calls. And I'm just trying to get your opinion of like an intermediate and midterm, like short term, is it's chugging along, and does it look like it's going to continue? I have it at like maybe going to 52 or 53, but can you just give me your opinion, please?
Yeah, absolutely. Okay, so Tony, one of the things that that you and I want to take a look at with regard to Cisco is a couple of things. One, you're looking for both, let's say, the bullish and the bearish aspects of it. Where are the sellers hanging out, so to speak? And a couple of days ago, 1, 2, 3 days ago, we did get a Tom DeMarco sequential sell system. We haven't seen that give you a signal that it is a sell. We're going to pick up from there when we come back from this break, because there are some other short-term topping patterns that may be in play here, and we'll give you what those parameters will be. It's Steve Rhodes with Tony in San Diego. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're on the line with Tony in San Diego, and we're going to go ahead and try to rip apart Cisco. And Tony specifically was asking about the intermediate term time frame out here. And Tony, one of the first things that I want to share with you, just make sure that even though we're going to take a look at some perhaps topping signals that exist and what those parameters are, I see absolutely no reason whatsoever to sell this equity right now. Okay, so I just want to make sure that that I'm clear there, and so that's and also, by the way, are you able to see my charts live? Are you watching this on Tiger?
I was until you went to commercial. Let me see if they're
okay. Well, and you can always watch the archive of this. Yeah, so you can always watch the archive of this once they get it posted after the show this afternoon. But the three charts that we're looking at, and I'll go back to the other one, we're just simply looking at the TAS market profile. So those are going to provide us with horizontal levels of support or resistance for a daily, a weekly, and an intermediate term time frame. And prices above the top of the box for the daily, well above it, which is at 46.67. By the way, that would be a support level. The weekly support level would be 44.04. We're trading well above that at 48.75. And the monthly, you had a close above that resistance level last month, which was 46.16. So at this stage here, 46.16 is where I would go with support here. If we go kind of from the larger time frame to the smaller time frame, so that means I'm going to start with the weekly. One of the things that we know, and I drew these rectangular boxes, there was a consolidation inside of Cisco. The top of the consolidation began in 2007, at that 2007 high. The bottom was in 2009. No big surprise there. Now, the reason why we can call it a consolidation at this stage was because that consolidation on the bottom was tested the week of August. This is the month of August 2011. By the way, it provided, as it was testing that prior low, it created a nice little hammer candle indicating to you and I that Cisco was trying to hammer out a bottom at that stage, and most certainly it did. My apology. I've got something that a little bit of dust or something that flew into my throat. So we're going to try to soothe it with cold water. The reason that we also know it's a consolidation was because when price came back up to that 2007 high, was back here in the February 2017 level, was really because of the bearish reversal candle that occurred in May 2017. Now, it never broke support. What I mean by that is price never broke below the bottom of its monthly profile out here. And in the month of November 2017, price broke above those 2007 highs. In effect, what this gave you was a breakout of a consolidation. Now, the cool thing about a consolidation pattern, and this one is very clean, is that it provides you and I with a measurement tool that says that your move should be equal to or greater than the consolidation. So it can be greater. So all I did was just take this rectangular box, Tony, and copied the exact same move. And what this does is this gives us a price projection of $55. So if you and I were not looking at the noise, meaning the weekly or the daily time frame charts, and we see that, hey, last month this thing closed above the top of its box, we're sitting here saying the $55 level is where this looks to be headed to. Okay, so that's what the big picture looks like to me as we speak right now for Cisco. But if we go ahead and we add any questions there?
No, once again, as I told you, I bought it at 46.40 in mid-August, but I also bought some stock and some calls January. So I feel comfortable with the stock, but the concern is, do you see any short-term turbulence? That I'm in the money in the calls right now. We're doing well on those, but as you know, just a little setback will disrupt those. So that
Sure. So let's do that. Let's go from there to then the daily chart to take a look at that turbulence to give you what you should be watching there. The weekly chart, by the way, that's up on the screen. You can see an A to B equals CD pattern that is underway. There's nothing here to suggest to you or I that this is not headed to its next level. It doesn't tell us when, but that next level would be the 1.618 A to B equals CD price projection of $50. As I look at this chart, there's nothing here that tells me that price is going to stop there over the intermediate term time frame, and instead it wants to get up to $54. Back to the daily time frame chart. In the daily time frame chart, what I want you to pay attention to then, in order to manage your calls, is price is moving higher, doing less relative energy. Now, yesterday would have been the signal, or was a signal, that there was a potential of a top that was forming, and that was because it created that shooting star. Remember, we took a look at that monthly chart and saw the exact opposite of that, which was a hammer candle. Hammer candle tells you the market's trying to hammer out a bottom. The shooting star typically works or it doesn't work. And what I mean by that is you typically see follow through on the very next session. Now, you can't hold me to that 100% of the time. But what we can say is a high probability of time is when that when that occurs out there. Now, so it's a topping signal. What I want you to pay attention to with regard to your call position, because of this pattern that's in place out here, that's present before markets turn, would be a close below Stevie's red line. It's green. That means our price oscillator is above zero, which means even if price closes below this, there could be nothing more than just a retracement back to support. But I don't think it sounds to me like you want to handle that, because support here is 46.67, right around there. Right now, that oscillator on change line is 48.50. You're at 48.75. So it's not like you're giving it a lot of room out there. If you were to see it close below that level today, then I would say, okay, there is your short-term topping pattern. You've got the stock. Stay with the stock. Go ahead and take your profit on the call position. As long as price stays above this pattern can continue to move higher. You know, your weather forecasters in San Diego different than our guys here in Florida. Here they look outside or they go to their thing and they say, you know, basically every day is a chance of rain. What do they say for you guys in San Diego? There's never any chance for rain, is there?
In the fall, but not this time of the year.
Okay, all right. So, you know, the pattern out here is just it's like I'm giving you the weather forecast. There's a chance of rain, better chance if we see price close below that oscillator and change line, and then you could see some type of retracement back to about 46. But otherwise, I would just continue to stick with it out there.
Okay, as long as it stays above 48.50, and I'm assuming I don't want to have to call you every day, that 48.50 is going to slowly rise.
It does.
Goes forward, correct?
It does, yeah. You know, what you can do to figure that out on your own is if you have a MACD tool and you can set it to exponential, use the time period on a daily chart of 19 and 39 versus 12 and 26. Don't take a look at anything other than the MACD line. Take that and add that to the 19-period exponential moving average. So if you do that, then you'll be able to know what my oscillator on change line figure is. Okay?
Okay, add the 1939 to the what exponential moving average?
Yeah, so put a 19-period exponential moving average just on your price area, and then add or subtract whatever the value of that MACD line is, using the 19 as your fast and the 39 as your slow in the settings area. If you've got a chart and you can do that, that would then get you to my figure that you say is either going to rise or fall, and you know exactly what you're looking for.
Gotcha, Steve. I appreciate your help, sir. Thank you so much.
My pleasure. Thanks so much for listening.
Thank you. Bye.
Yep, you bet. That was Tony in San Diego. Now, light sweet crude, because Robert was asking about light sweet crude. So we're going to break here. Robert, one other thing. Now, look, light sweet crude, it looks like it's moving higher, but I can tell you in dollars it's up against the prior swing area. In euros it is, because we're taking a look at the global flow of capital out here. It doesn't look bad, but you're up against resistance in dollars and euros, not so much in yen. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one of our Denners is wanting some information on Marathon Petroleum Corp. Is a intermediate to long-term holder of this equity and just simply wants to add to that position out here. And so first, top dog, we'll just call you TD. TD Ameritrade out there. This morning might have been it. Let me show you what I mean there. Now, so here's what you're up against. So it kind of gets so you're in your position, you're into it for a long-term standpoint. And if we take a look at a daily time frame, we could see the price is moving higher, doing less relative energy. And we can see that that's how the bottom was formed out here back in July, by the way. So you've got that same pattern that's going on, always a little bit of a concern. And then to add misery to this chart here is if we start doing our wave count from that low out there on July 5th, we happen to have yesterday confirmed a 7th wave move. Now, when you get that, if it's confirmed, you're always looking for something to come back to support. So you and I would use as support the bullish structured TAS profile box, and that low was 82.96. And we actually hit that today, and it certainly bounced off it, and it's moving higher. But, if price closes below Stevie's green line, which is trading at right now about 84.90, maybe it heads back there, and maybe it actually comes and tests the September 20th level, or maybe even something more than that. The reason I say maybe something more than that is because if you and I go take a look at the monthly time frame chart out here, and you probably already did this work, so I'm just really sharing this for everybody else. If you take a look at the low in 2016, again, we're looking at the monthly chart now for Marathon Oil. MPC is the ticker symbol. We're in wave number 7, or potentially in wave number 7. As we speak. Now the month is not over. It's September. This can continue on, as you know, and it will continue on as long as price stays above Stevie's green line at 76.56 right now. Of course, that's going to change over time. But now you've got a potential topping-ish style signal on a monthly. Not confirmed, right? Can't be confirmed in this case here till October. But then we've got those daily patterns out there. And I want to be able to answer your question. If I'm going to answer your question from a long-term standpoint, then I'm going to just come over and take a look at the monthly chart and say 76.57 is the number, especially knowing that we still have this pattern that hasn't really resolved itself on the daily time frame out there. So I hope that that answers your question, or at least you can understand my logic, or at least what I think is logic out there, and that's on Marathon Petroleum Corporation out there. I don't see any other questions. I didn't really take a look at what was going on in the equity futures markets. We have boom, boom, which I prefer just simply to go to right to what folks are inquiring about, because inquiring minds want to know. So, what's the market doing before we get the Fed announcement, as if we don't know what the Fed is going to say? Actually, it's all about really the language and how it might change and blah, 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 blah. Like, rates are going up. We know that. The question is what's going to happen in the actual futures markets with regard to the 30-year and other things like that. In the case of the 30-year, just as long as we're here, here's what you need to see in order for bonds to continue to move lower. And it's not. I'm just trying to look at to see where that file is. So let me pull up that file. Here we go. So here's what we know. And you and I took a look at this last week, and we can take a look at this as often as we like. What we do know, by the way, it's a weekly time frame chart. We know that the high that was formed back in December of 2013 at the 303 level. Oh, I'm looking at the 10-year note out here. Well, let's take a look at the 10-year note. Let's take a look at the 10-year. So we know from a 10-year standpoint that was a significant level of resistance. But there was a secondary level of resistance. Oh, I see I made a mistake even in this morning's newsletter. What was I thinking? Apparently I wasn't thinking. Sorry about that, subscribers. But what we can see out here is that if the bonds are going to continue to move lower out here, and I'm not talking the 30-year now, what you're going to see the rate do, the 10-year rate, is get above 3.115. That is your resistance level. If you see that, then you can go ahead and short the shorter-term duration bond out there. If we take a look at the 30-year, let me go find that out here. And this would be more for you folks that are in TBT and so forth, so you know what to be watching for and looking at, because you want to pay attention, certainly to that rate. Here we go. Here what we're looking at is, prices broken above that 313 level. This is also a weekly time frame chart. So what is the next level to be focused on and paying attention to, where we would have some resistance? Give me a second. We're going to put a secondary yellow line up on our screen, and it's going to be 3.25, 3.255 specifically. In order for your TBT to move higher, In order for the 30-year to move down, you're going to need to see price move above that level. And if it does move above that level, then that says, okay, price could easily run up to its next horizontal trading range in the 3.63 type area out there. So how are the markets going to respond? I don't know. What is going on inside the markets as we speak right now with regard to the 30-year? The 30-year is acting as of 1:36 in the afternoon that in essence it bottomed and it wants to move higher. That's its message. Now, I say that because yesterday was yet another test of an important swing point. That was a swing point from May 18th out there. That price was 139 and 24.30 seconds out there. Yesterday was at least test number 3, a test and rejection of that level. Price is trading back inside of a brand new daily profile that formed out here. Let me spread this out for you. It'll be a little bit easier to see. And as long as price stays above 140, even Steven, then there's no reason for price not to at least bounce up to 140.29 out there. So that's what I see when I take a look at the 30-year. A question, what are my thoughts on metals, coming from Mike K out here? When we take a look at metals, we take a look at them right now, what we can see is that the sellers, right, so it's important for you and I to go find the sellers and find the buyers. The sellers are so clear, they're clear as a bell. Not Isabel, but clear as a bell. Not that bells are clear. Hey, just get to it, Steve-O. Just take a look at this chart out here, Mike. And if we look at panels number 2 and panel number 4, you see where the sellers are. If you're a trader of gold in pound sterling, and trust me, there's a ton of them in London, they're looking at what gold is doing in pound sterling. You tell me at this stage here, are they buying or are they selling? Yes, they are selling. They are clear sellers. You're basically at the low of the day out here, and you're breaking through another swing point. So we know what they're doing. If we take a look at the traders of gold in other areas of Europe that are trading gold in euros, and yes, there are plenty of those, they are sellers. Yes, it's at the low of the day, but what it's also maybe doing is trying to bust through another swing point. That swing point is 10-12-60. You're at 10-13 as we speak right now. I don't know where it's going to end up. But we do know, Mike, that those two groups of traders are absolute sellers. In the U.S., what we have is just a good old-fashioned consolidation, and it's not really clear. But there's no chance gold is going to bust out to the upside. When I mean bust out, I mean close above 1214.50 until you see buyers of gold in euros and buyers of gold in pound sterling. In yen, right now, it's still bullish configuration. It's the only thing that's trading above the top of a market profile. And today was just so far a pullback into that level. So here's the tug of war between dollars and yen versus pounds and euros. This is the battle with regard to metals, or at least gold. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So, usually before a Fed announcement, what you and I try to do is see if there's any tells in the market with regard to the indices out here. And if we just simply take a look at the 30-minute time frame charts here for the ES, the NQ, the Dow, and the Russell 2000, here's what we know about the NQ at this stage. We know that prices made it back. It's made a 100% move of a move. What I mean by that is, let me go ahead and put a red line in here. Not that that means that it's a red line. It's not going to be busted through. But what price has done is it now is at about the 76.37 level. We've been up here. You can almost kind of call it a triple-ish type of a top. But I don't get too caught up into that stuff, into that nomenclature out here. Instead, what I would say is, hey, watch the 76.37.50 level. So it's hit a level where it should back off. It has backed off. It's not giving you any kind of real significant level of signals of any sort that I see on a 30-minute time frame. If price is going to pull back and you're going to ask me where's it going to head to on a 30-minute chart, I'd say, well, you get it all the way down to the 75.28-ish level. I see three higher lows out here. That's well, actually more. I see just simply coming back to the lows in September 17th. What we have is a series of higher lows, and we have a series of higher highs out here across the board. So that certainly is a definition of an uptrend. So price hit resistance and it pulled back. That's all we know inside the NQ on a 30-minute time frame chart. Inside the ES mini, it's not really doing much, right? It just simply hasn't been doing much since the gap to the downside that took place on Sunday evening. Here's where we could draw that red line, so we will, which is the close, or the low, I should say, of Friday, last Friday, around 29.32. And so we've been pretty much in a tight range between the 29.32 level and around the 29.17-ish range out here. So just kind of consolidating sideways out here, not really providing you or I with a real tell in the markets as of just yet. If we take a look at the Dow, a slightly different picture. Whereas inside of the NQ, what we saw was price making a series of higher highs and higher lows. We don't have that going on inside of the Dow Equity Futures contract on a 30-minute basis. We have a series of lower highs, right? We could actually just simply draw a price channel in here. If we do, it pretty much looks like this. So there's your price channel, and we can just simply back it up. It doesn't matter what color I use, but there's a clear price channel inside of the Dow Equity Futures contract. So what's cool about this? Well, if you can break to the upside, close above that descending channel line, well, then that's going to give you a piece of information as to how the market would perhaps trade for the rest of the day after the Fed announcement out there. Likewise, it should have or could have support at about 26,485. What we know at 1:45 in the afternoon on a short-term basis, what we're seeing is a pattern opposite of what we saw going on inside the NQ. So what we've got really is no clear signals here. And inside the Russell 2000, it just has a mind of its own. Not really that interested in the 30-minute time frame necessarily for it, other than to say that it did give you a bottoming signal here earlier this morning. I don't know why my phone just picked up as if it thinks I'm talking to it. And that's where it makes, good Lord, how do you shut that thing off? In any event, and not that I don't like to talk to my phone. I just don't usually talk to my phone. But you can see here it's got that Rhodes Momentum Indicator bottom signal that formed earlier, about 12:30 or so this afternoon. Well, let me give you the exact time. 12:30. Hey, how about that? That was the exact time. Actually confirmed at 1 o'clock. And now we got price pulling back and testing level of support, 1711 inside of it. So I don't know. Is that the signal? Was it really the Russell 2000 that was telling us which way the markets were going to trade? Yeah, maybe. It is possible out there. But we've got conflicting messages. If we go to the larger time frames, meaning we look at the daily and the weekly, and those are the green and blue bars that are on our screen out here. The ES Mini is fine unless it closes below 29.14. The NQ looks like it is trying to target the 76.70 level. That would be the top of the weekly box. And he closed above that, well, then it's going to go back to its all-time highs out there. The Dow really isn't, even though we have those declining tops, so to speak, it's got a brand new bearish structure, slightly bearish structured profile. So sellers should be in control of the price between 26,820 and 26,405. So maybe a continued pullback here to 26,405 is in play. And then to the Russell 2000, it is the top of the weekly box at 1706 that continues to act as support. So I would use a close below 1706 to be a signal that price would pull back to 1692 and in. Are there any real signals here, clear-cut signals, with everybody being on the same page as we take a look at the equity futures market? And there's not. There is not. So what does that mean? That means you don't change your positions if you're already in them, because there's not anything that I can share with you that would change that out here. Is it sellers that should be in control of the market right now? If you take a look at the ES, yes. And I would say that because we've got that topping pattern out there. We've got two topping patterns out there. We've got Stevie's Rhodes Momentum Indicator. We've got a Tom DeMark setup 9 count. We're below Stevie's green line at 29.31 out there. But the problem is you and I are in these markets that we are not used to navigating. And what I mean by that is the concentration of capital across the globe is knocking on your door. It is right here, right now. How do we know that? We know that because we go take a look at what the traders around the globe are doing. For example, in the NQ, let's just take a look at it. Right now, as we speak, if you're sitting over in Japan and your task is to go ahead and buy breakouts, you're buying the NQ right now. Because in your local currency, price is trading above its all-time high. Today, it made a new all-time high. Now, you're going to do it with a bit of reservation because you're looking at this saying, yeah, but I'm the only one that it is breaking. Look, all you're concerned about is the return of money in your currency. But yes, you do care about what's going on inside the NQ in dollars, which is in nothing more than a consolidation. You see the bottom of which is 74.20, the top of which is 77.20 out there. The NQ is just trying to figure out what it should do out here because it knows, even though the Dow has been pulling back, it knows what you and I know. It knows that traders around the globe have been parking their money inside of the Dow, that it is at new all-time highs, or it's made new all-time highs, in the past several days in all major currencies out there. And the concentration of capital is here. And therefore, it really makes it tricky, because we're in markets that are not normal. When I say not normal, meaning we can't go back to our old tools and think in normal trading markets when maybe capital is flowing across the globe. That's different than when the flow of capital is concentrated here. How do we know that? We know that just simply by using this set of tools out here. We know that by just taking a look at just simple trend line analysis, by figuring out, hey, what's going on in the markets out here. If I hit this button where we can take a look at indices from across the globe, from the U.S. to the United Kingdom to Australia to India to the emerging markets to Japan to China to Canada to Germany out here. Just take a look at those descending trend lines. Which one is breaking out? It's the Dow. This shows you where the concentration of capital is. It is that simple. Steve Rhodes with TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So nothing really to do for the next 6-7 minutes other than wait for our friend David White to get his show going. We'll know what the Fed says at that stage, which is that they're going to raise interest rates, and then we'll see how the market responds to the other language. In looking for some type of tell out here, we just know what to look for. That's about the best thing that I can share with you. If the market's going to get moving to the downside, as an example, the spot volatility index will trade above its 50-day exponential moving average. Not trade above, close above. Right now, that would be 1293. You're at 1198. If it gets to 1293 today and closes above it, you'll have a one-day rate of change greater than 10%. And then what I will tell you is do not go short at the end of the day. Do not do it, because you're going to get a bouncer bottom signal inside the market just simply as a result of that. But the level to be watching will be 1293. With regard to what the longer-term bond is going to do, we already know what the interest rate is that you're looking for in order to be able to get downside action. What we know is we've seen tests and rejections of key swing points, saying that bonds actually want to trade higher. Will they or won't they? I don't know. If you're asking me, the position to be in is neutral. You be in a neutral position because we're so close to resistance. You see if it holds or if price breaks through it, and then you've got the momentum move either to the upside or you take that counter trend move out there. With regard to gold, we know that there's sellers in both pounds and euros out there. So unless we're going to see some big, huge currency shifts, or a big dollar move inside of gold out there, we don't have everybody on the same plate. And in essence, that's what you need in order for markets to move higher. That's what you and I were just looking at with regard to the NQ or even light sweet crude like we did with Robert. At least there, it's moving higher in all major currency. Looks, here we go. You can see how it's been moving higher in unison in all major currencies for the most part. That is really the trick of the game. Nobody wants to tell you that, because then all of a sudden you start to say, this game is actually pretty easy. All we have to do is show you the money. And that's what we do here at TFNN. So, folks, thanks so much for being here. Stay tuned. David White's up next, 2 to 3. Tom O'Brien from 3 to 5. I'll be back with you tomorrow, and we'll figure out what we couldn't figure out today. I promise you we'll do that. Take care. Have a great Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.